How will Trump's tariffs and interest rate cuts affect Canadian homeowners? Imagine standing at a financial crossroad where every decision could make or break your financial future. In 2025, over 1 million Canadian homeowners are facing a mortgage renewal nightmare that could reshape their economic landscape. With Donald Trump's new tariffs throwing a wrench into Canada's economy, machinery, and the Bank of Canada poised to make a strategic rate cut, the question burning in everyone's mind is simple. Will these changes save you or sink you? The mortgage renewal landscape in 2025. The numbers are stark and unforgiving. Where mortgages once lived at a comfortable 2% range during the pandemic's golden years, renewals now loom at 4% or higher. This isn't a minor increase. You could see monthly payments jump hundreds of dollars. For a typical $400,000 mortgage in Canada, homeowners might be looking at a difference of between $1,700 to $2,100 monthly. That's a difference that could cause havoc in many household budgets and fundamentally alter financial plans. Don't get me wrong, there was a point in time where interest rates exceeded 7%, so I'll take 4% all day long, but it is still a lot for some households, especially after being strangled financially for almost 3 years with brutal inflation. Yes, many homes are tight on money these days, considering the high cost of everything else. The impact of Trump's tariffs. Trade tensions are no longer abstract economic discussions. They are personal. Trump's tariffs are more than political posturing. They're economic dynamite that could trigger inflationary pressures and force the Bank of Canada's hand. These tariffs aren't just about trade, they're about preventing a potential technical recession that could devastate Canadian households. When tariffs are imposed on key imports like steel, lumber, aluminum, businesses face higher costs, which are then passed down to U.S. consumers throughout rising prices. The Canadian government will, in tune, they will counter tariff. This spike in prices will cause inflation to accelerate, making everyday essentials more expensive for Canadians. The Bank of Canada, they might respond to this inflation by cutting interest rates to make borrowing cheaper, giving struggling households and businesses some financial breathing room. This approach is meant to stimulate economic activity and prevent deeper economic pain by reducing the cost of mortgages, loans, and credit. How low could these rates go? If the economy takes a significant hit, some experts predict the Bank of Canada could implement a series of cuts, potentially bringing the overnight lending rate down another 75 basis points or more. But this decision will depend on the extent of the economic damage. If inflation runs high and job losses increase, rate cuts could go further to prevent a technical recession. However, if Trump lifted these tariffs within the next couple of months, trade would likely stabilize and prevent a major economic downturn. You'll notice that I keep saying technical recession. We have been in a recession for quite some time. However, the government refused to admit it. Now, because of falsely inflated GDP from immigration, that has kept us out of a technical recession. If you removed the ridiculous amounts of immigration Canada has had, and used more common numbers, our GDP has been in a negative position for quite some time. So yes, a technical recession would apply, and it probably will in Q3 of this coming year. Short-term relief versus long-term consequences. Let's be clear, a rate cut isn't a magic wand. While it might provide momentary breathing room, it won't resurrect the ultra-low pandemic rates. Homeowners will still face significantly higher payments, and the pain extends beyond mortgage costs. Rising property taxes, largely impacted by the crazy amounts of immigration. Utilities and the overall cost of living expenses create a perfect storm for a financial pressure that a modest rate cut can only partially mitigate. Options for homeowners facing renewal. Survival requires strategy. Refinancing offers lower monthly payments, but comes with a hidden cost of extending the mortgage timelines and increased total interest. One of the key benefits of refinancing is its ability to provide immediate relief by lowering your monthly payments through the extension of your amortization period, spreading your loan over 25 or 30 years. This can free up much needed cash flow, allowing you to cover the costs of rising expenses and build a financial buffer. Not an ideal situation, but better than having to sell your house. While it's true that you'll be paying more interest over the life of your loan, Refinancing is an alternative to having to lose your home. It lets you maintain stability without the stress of downsizing or relocating. If you're wondering whether refinancing could be the right option for you, don't hesitate to reach out to me. I can help assess your financial situation and explore how refinancing a mortgage could offer the breathing room you need without sacrificing your long-term goals. Let's figure out the best path forward together. The broader housing market implications. Rate cuts could temporarily stimulate the housing market, particularly in affordable regions. However, the underlying affordability crisis won't magically disappear. A stronger emphasis on increasing housing supply is essential if you want to achieve long-term improvements in affordability. The rental market might see increased pressure as fewer people can transition into home ownership, creating a complex ecosystem of housing supply and demand. Preparation is your best weapon. In this economic chess game, preparation isn't just recommended, it's essential. Start exploring options early, consult mortgage professionals, and develop a flexible strategy. The coming months will test the financial resilience of Canadian homeowners, and those who plan ahead will best be positioned to weather the storm. Please share this video with someone new. Call me anytime with your skill testing questions, and if you enjoyed this video, you'll probably like this one too. Grab a copy of my best-selling book, Rockstar Real Estate Investing, for more in-depth knowledge. The link to buy the book on Amazon is below in the description. The link to book time with me is also below in the description. Remember to own your life. Have a nice day. Bye-bye.